We know that U.S.-China routes are among the most profitable in the world. How significant is this easing?
So right now, at least from what we've seen from the CAC, it does seem like this most recent policy is something like a short-term ceasefire. We do believe that this latest policy does open a very big path for U.S. airlines to return to China. However, we have seen a lot of tension basically over flight rights over the past few years, and we know that right now, given the entire circumstances between the U.S.-China trade war and all of the tension, we know that this kind of aviation fight there is still room for escalation. So even though this is a short-term ceasefire, we can't rule out any other further escalations in the future.
Having said that, though, Luya, the U.S. ban, how will that impact the likes of Air China, Air Eastern? We know as well that they have limited exposure to the U.S.
So for the actual airlines, if we're looking at earnings, these kinds of moves actually really does not affect their earnings much at all, because simply we're looking at the trade war tensions over the past few years. We know that for both the Chinese and the U.S. airlines, they've been rapidly decreasing their capacity on the U.S.-China route. So right now, when it comes to these kinds of, who gets to fly who, for how often, really in the grand scheme of things, these airlines have already really massively reduced their reliancy on these kinds of routes. So in the short term, effects on earnings really won't be very great at all.
So not much earnings impact. Luya, I want to bring up a chart just to kind of show when it comes to how, in terms of passenger traffic in China, those volumes actually have bounced back and doubled since the bottom, but we still haven't fully recovered just yet. Is this recovery really more dependent on the pent-up demand, or are you seeing that it really is contingent on the government restrictions now?
So while we do see signs of a pretty substantial amount of pent-up demand, we do know that at least for this year, for 2021, really traffic is going to be completely contingent on whether or not the government allows these flights to resume. And this is something we see both in China as well as in the U.S. and the rest of the world. So if people are looking at pent-up demand as a potential driver for traffic for this year, they might be a little bit disappointed because at least for the rest of the year, it's really going to be the governments that have to say and whether or not how many flights will be flown.
So which Chinese airlines, the ones that you cover, Luya, could actually gain the most from what's looking to be a pretty nascent recovery so far?
So right now we do prefer basically all three of the major airlines: Air China, China Eastern, and China Southern. For China Eastern and China Southern, we do think that they have the potential to gain more market share. Not in domestic China, but in the regional markets, like, say, Japan, Korea, Southeast Asia, because right now we know that a lot of their foreign competitors are really not in a very good shape to increase their market share. So for these Chinese airlines, because they have no lack of liquidity, we do think that potentially in the near term or midterm, they might have more opportunities to gain simply because they are in a better shape right now with the domestic market bouncing back.
Luya, we heard from the Singapore Prime Minister saying that travel will not be the same post-COVID. For instance, short trips to the likes of Bangkok from Singapore will have to wait much longer. What do you make of that statement, and what key trends do you see developing?
So really in the long term, we don't see air travel shifting by much, but we do know that for the next few years at least, we could see some differences in trends. Like people have said before, ticket prices are very, very likely to rise because the smaller airlines will likely fall out of business, or many will cut capacity possibly permanently. So ticket prices will go up. And also when it comes to access, we know that at least in regional markets, airlines are going to be a lot more prudent when adding new routes. So really at the end of the day, travelers will have fewer options, higher prices. In terms of access, it may not be much higher, but in terms of prices, it will likely be a lot higher.
And Luya, at least Singapore, I mean, they're trying to create these travel bubbles, and countries are also coming up with these bilateral agreements for travel now. I see that you still have a neutral rating when it comes to Cathay Pacific. Hong Kong isn't really making those conversations right now. Is Hong Kong at a big disadvantage for not doing this?
Unfortunately, Hong Kong is such a massive global hub that for them, in order to really rely on these regional travel bubbles, it's a little bit difficult. We're looking at Cathay Pacific, and we know that their exposure to the European markets and the North American markets are rather huge. So for them, simply relying on, say, Southeast Asia and North Asian flights, it really won't be enough to really boost their revenue back to what it was. So Hong Kong is unfortunately so globally exposed that if there is still COVID active anywhere in the world, Hong Kong will be affected.